have some certain things we have to do. But now, can you come and have a marker and recap for what we did yesterday? You can come with your book.
Okay.
Just teach me. You understand? Just teaching me, that's it.
Okay. Yesterday we started by talking about price action, what price action is all about.
Yeah. Just sit down.
Yes. So you need to understand that price action is the study of price movement in the market and is a term often used in technical analysis. And price action helps to interpret and describe price movement of an asset. So after then, we'll now start talking about the 7 different types of price action. So number one is the bullish.
Bullish.
Yeah, and sorry.
Continue now, no problem.
Okay, price action is being categorized into 2 different types.
Yes.
We have the bullish and we have the bearish.
Yes.
Yeah. So under the bullish we have 3. Then under the bearish we have 3 as well. So number 1 under the bullish is hammer candlestick. Number 2 is bullish engulfing candlestick. Number 3 is the money star. Then under the bearish, yes. Number 1 is the shooting or pin bar. Number 2 is the bearing engulfing candlestick, and number 3 is the evening star. So, and after then, we now started explaining them one by one in details.
Okay.
So the hammer candlestick, the hammer bullish candlestick, we are meant to understand that is one of the most popular candlestick pattern. The hammer indicates a downtrend is turning into a uptrend, and in that trend, we may want to buy Bitcoin in the sense that when you notice that there is a in your trend. So that is, and before we go for that, this is the sign of hammer candlestick is like this. Yeah. This is the wig. This is the body. Okay. So when you see something like this, know that is a hammer candlestick. Okay. And the second one is the bullish engulfing candlestick. So you need to understand that the bullish engulfing candlestick is a pattern. It's a pattern formation thread follows. The engulfing has a bullish version called the bullish engulfing. The engulfing pattern consists of 2 candlesticks. We get, and it's like this. So this green one is engulfing this red one. So when you see something like that, know that it's bullish engulfing candlestick. So when you see something like that,
Yeah.
these are the sign.
This is a sketching, I love it. It's a full engulfing canal.
So when you see something like that, it means the price will go up. So the next one under the bullish candlestick is the money star. So you have to understand that the money star is the final candlestick pattern that every trader ought to know. The money star is still under the bullish candlestick. This pattern consists of 3 candles. The bullish version is the money star. When the first candle is long, long red body, followed by the small body that pushes it into a new low. Then the third candle is a large green candle that returns close to the opening price of the first candle. So just like I read, said the morning star is made of three candlestick. So it's something like this. So this is how the morning star looks like.
Good. Good bullish pattern.
So this is how the morning stars look like. So when you see something like this, no, it's a morning star. So
That's all you can do, right? Will you continue? Do you want to continue what you're doing?
I should continue.
Do you want to continue?
Anything you want.
No, do you want to
No,
continue?
anything you want.
I continue.
So next is the shooting or the pin bar.
Yeah.
So the shooting star is a popular pattern widely followed by a trader. The simplicity of this single candle pattern helps makes it popular. The shooting star will have a long wick emerging from the top of this of a small body. This means that the price opened in the lower portion of the candle range traded to a new highs. Then immediately we trade closely. The near open, the color of the body is insignificant to identifying the pattern. When spotted, the shooting star allows crypto slash gold slash currency trader etc to the end of a bullish trend. So it's something like this. See, like this thing now, this one is let us say is opposite to Ama candlestick. You see, this is Ama candlestick. This place now, this button now is at the top, this one now is at the bottom.
Yes.
Okay, so don't forget you also have a long break.
Weak also, yes.
The next is the bearish engulfing candlestick. The engulfing pattern is another pattern trader followed. The engulfing is a reversal pattern that signals a strong trend change within the market. This is the opposite of the bullish engulfing candlestick. So it's like this. So you can see in this one, the green is longer. Why this one now? The red is longer.
Longer, yes.
Yeah, so you can see it's the opposite of this one. This is a bearish engulfing candlestick. It's the opposite to bullish bearing candlestick.
Okay.
So you can see it's opposite to them.
Bullish engulfing.
Bullish engulfing candlestick. Yeah. So now, so when you see something like that, you know that there is bearish engulfing. So the next one, actually, the second to the last, is the evening star.
The evening star.
So the evening star is the opposite of morning star. The evening star is one of the stronger bearish candlestick pattern we have in the Forex market. So just like I said earlier, this is the morning star. So the evening star is opposite to the morning star. So let me show you.
How the evening star is.
So from our diagram, you can see we have red, red, while this one have green, green, and discover that this red, this one is at the bottom, while this one is at the top. So you
I
can
can
see.
see. Okay.
So you can see.
Okay.
Yeah, so just opposite to the monster. The monster is opposite to the monster. So when you see something like that, no, it's a monster.
So now I want to understand, where does it happen? The evening star, where does it happen?
It's happened at the downtrend.
No. The evening star happen at the okay, I've not yet taught you that one. Don't worry. Let's just do that one. Don't worry, you've gotten what I wanted to get. So let's just do it. Let's treat it as a different topic. That's a very nice one. You really try. At least I'm now okay that you can go and read and understand what we did. That's the essence of you teaching this thing. You can go home and read and understand. Now let's move over to support and resistance as topic. Support and resistance. Support and resistance is one of the most widely used concepts in trading. It's one of the most widely used concepts in trading. One of the most widely used concepts in trading. First of paragraph. Strangely enough, comma, everyone seems to have their own idea. Strangely enough, comma, everyone seems to have their own idea of how you should measure support and resistance. Full stop. of how you should measure support and resistance. Full stop. Of how you should measure support and resistance. Full stop. Paragraph. Let's take a look at the basics first. Paragraph. Let's take a look at the basics first. I think you need a space for this thing that I'm about to show you now using drawing. Okay. Just draw this. Draw this. The way it's drawn. What's that thing that you do? This is where mine is. It's just like something like an ascending. It's ascending, even here. It's this thing and this thing is not on the same level, but yours is on the same. Yours is like this, like just like this. That's the way yours is. But look at the way it's ascending. It must be ascending for you to understand it. Ascending. Yes, that's very good. Yes, that's very good. Ascending. Good. That's it. The resistance. So remember that I was telling you yesterday while teaching we use the lines as candles. You remember, right? So in essence, I can still do something like this. My candles, candles. Are you seeing it? Candles, candles. Are you seeing it?
Yeah.
So in essence, I can still do something like this. Proper. Interpretation. Okay. So bullish engulfing made this to start, and bearish engulfing made this to start going down, start going down, start going down. Then hammer. Are you understanding what I'm doing? Yeah? Hammer made this to start going up. I'll explain. Start going up. Start going up. Start going up. Start going up. The reason why I'm using these two things is just for me to show you that you can use line to illustrate your movements. Also, you can use candle. If I want, I'll just clean the candle and use only line. So when I use the line, you will now understand that it's just a bullish, bearish, bullish, bearish, bullish movement. Okay? Are you getting it?
Yeah.
What about the don't they enter where the heat, I mean? Don't worry, you understand it. So we are moving down with an evening star. So this evening star made this to move, go down, go down, go down, while morning star made this to push up, push up, push up, push up, up, up. So what?
That's the doji.
Eh?
What you say?
Yeah, that's the doji. That's the star. Remember, I was talking to you yesterday about doji that it's also a star.
Yeah.
So that's your star. Doji can be your star. Your star can also come like this. Your star can be filled. Do you understand? So your doji or like this is still your star. Okay? Now, what else is going to make it to come down there? We've used bearish and not we use shooting star. Shooting star. Right? Are you getting it?
Yeah.
So people have not made this thing to come down, come down, come down. Then bullish engulfing now made this. So go up, go up, go up, go up, go up, go up. Can we have it like this in your notebook? Just in this space here. Now it's time for us to draw. Let's just have it like this. Use your pen. You can use your pen. Or should I get red pen? Good. Use your red pen as then green. We can use your blue pen as the green. Okay. But let me teach you this before you draw. Okay? Do you notice anything here?
Yeah, this is like another day on my
Okay. The hammer in the support zone, right? Because that's the support zone. The hammer was seen in the support zone. And that's the only place you can see it. And it will work out.
without top now. I'm seeing the most
Here. Evening star. Evening star. Remember your morning star. The star is at the downside. You remember, right? Your morning star, the star is at the downside. So the evening star, the star is where?
this one. The morning star, then that one
Yes.
is the shooting star.
Okay. And this. Do you notice where it happened?
Yeah.
So when you come at the resistance, what do you need to see? Having the market being like this, what actually do you really need to see for you to know that this market is really going to push to the downside? Remember, we don't have those things. And remember that what we have here is day 1, day 2, day 2, day 3, day 4, and day 5. So this is day 6 and this is day 7. Are you getting it?
Yeah.
So Monday, Tuesday, Wednesday, Thursday, Friday, we wait for the next Monday. Monday, because we don't have markets on Saturdays and Sundays. Yes. Monday, Tuesday, Wednesday, Thursday, Friday. And we wait for the next Monday to start from here. So Tuesday, the candle at the resistance zone. The candle at the resistance zone showed a bearish engulfing pattern candlestick. Showing a bearish engulfing pattern candlestick, what do? we now sell at the resistance. You notice that I saw two things here. I said that the market has gotten to the resistance. That's the number one thing. Number two thing is that I saw a bearish engulfing candle. Now, my practice as a forex trader for years, this thing has really happened in the forex market for like 80%. And those 80%, the market went down. So now, looking at it, you're already telling yourself that what I need to do is to do what? Here. So what you need to do is to do what? Sell. So when you sell, what happens? The market can form anyhow he wants to form. It might probably come and do this thing. I'm telling you, when you sell, it might come and do this thing. Move up small. Let's be looking at it before this will happen. Are you saying it? It can choose to, if it depends on how much sellers that sold here, because the whole world is selling here. Everybody now understand that this is what is happening. So the whole world that knows about forex, they are selling here. So it depends on how much they are using to sell. If they are selling, if there is a big company that is training people, new retail traders to sell, what is it going to do? To just pipe speed. Telling you just one candle, just from here. You just see just one candle to spike with speed. And get to this place just one. That day, that particular day. So if you sold, you just have this thing, you just make mega money immediately and you cut it whenever you get to the support. You just cut it immediately and take your money. But most of the times I just allow the market to get in. So when the market gets here, I'll take my money and run. I don't care whatever happens. Because from here to here in a daily candle is already giving me like, if it's 0.01, that's the least we can use. It's already giving me like something like $200. So imagine when you use 0.05, $8,000 plus. Just take the money from away. So that's me. I don't wait for it to get to that moment. But I know my methods that, yeah. Because most of the times when the market, just look at what it did here. Just look at what it did here. It got to this place and it started going back. So if you sold here and it gives you something like $30 from here to here, it will start going back, taking the money back. Like from here to here, it will be remaining $22. From here to here, it will be remaining like, let's say, $3. You understand? So, but this move that went down, if that like from here again to this place, it will give you like that $22 again. From here to here, it will give you like that $30 again. From here to here, it will give you like that $45. From here to here, it will give you like $18. Do you understand it? So as it's going back, it's taking back the profits. As it's going down, it's giving you more. Don't worry, why you practicalize it, you understand it, okay? So that's just it. You now understand that the place you must activate and sell is at the resistance zone. You cannot see a bearish engulfing pattern here and tell me that you must sell here. Because you want to make use of a bearish pattern candlestick in a support zone, which is not right. Now, support works with bullish. Support equals to bullish pattern, bullish candlestick pattern, sorry. Bullish candlestick pattern. Then resistance is equals to bearish candlestick. Do you understand this? Do you understand it? So in resistance, we make use of what bearish candlestick pattern. So in support, we make use of bullish candlestick pattern. So that's the reason why you came here. What you saw that moved the market from the resistance to the support, what you saw that pushed it down, what did we say that this thing is? Uptrend. So what really made this uptrend to happen from the support zone was this hammer. Okay? Now, when it got to the resistance, it formed another thing. What did it form? Evening star that made it to do what? Move from resistance to support. So what else moved from this, made this thing to move from support to resistance? The morning star. So this is how we trade. So when the market gets here, we sell. When it gets here, we do what? We buy. When it gets here, we sell. When it gets here, we do what? We buy. That's how the market works. So you can now sketch this thing out. I think you should use this big space so that it will be plain. Let me get more in the drink. Should I go up for you? Are you going to use line for it? What are you thinking? Anyone. If you turn your back so that it will be big.
Okay, like this.
And then yes. You know this thing is very simple when you use line. Just do this, do this, do this. Want to snap?
Yes, but if I get to one, how fix this?
Oh,
Like, fix it for hour.
we can expand.
Yeah.
Should I use my phone? Okay. Then let's go back to our notes. When the price moves up, we are still under support and resistance. I think you should start not here. Yeah. When the price moves up, when the price moves up and then pulls back, comma, and then pulls back, comma, the highest point reached before it pulled back is now resistance. The highest point reached before it pulled back is now resistance. The highest point reached before it pulled back is now resistance. Stop. All right. Resistance levels indicate where there will be a surplus of sellers. Resistance levels indicate where there will be a surplus of sellers. Full stop. Paragraph again. When the price continues up again, or when the price continues up again, comma, when the price continues up again, comma, the lowest point reached before it started back is now support. The lowest point reached before it started going up again is now the support. The lowest point reached before it started going up again is now support, where there will be a surplus of buyers. Support levels indicate where there will be a surplus of buyers. Full stop. Space. That's one line space in the paragraph. In this way, comma, resistance and support are continually formed. In this way, comma, resistance and support are continually formed as the price moves up and down over time. Full stop. Resistance and supports are continually formed as the price moves up and down over time. Full stop. Resistance and supports are continually formed as the price moves up and down over time. Full stop. The reverse is true during a downtrend. The reverse is true during a downtrend. In the most basic way, comma, in the most basic way, comma, this is how support and resistance are normally traded. In the most basic way, comma, This is how support and resistance are mostly traded. Number one, number one. Buy when the price falls towards support, stroke, or at the support. Sorry, not stroke. Buy when the price falls, or or buy when the price falls towards support. Let's put it like that. Number two, sell when the price rises towards resistance. Sell when the price rises towards resistance. Sell when the price rises towards resistance. Buy number three. Buy when the price breaks up to resistance. Buy when the price breaks up to resistance. Sell when the price breaks down through support. Sell when the price breaks down through support. So now we have some support and resistance trick that I would love to teach you personally. So this is it. This is when the market is in ascending level. That's first support and resistance. This is the side movement of the market because the market can move in an ascending level, sideways, or descending level. Okay. Now this is the sideways movement of the market. So let's still do it the way I did it before. Okay. Let me just get to. Where is the support? Where is the resistance?
Resistance support.
Wow. Okay. Not support. This thing can happen in an ascending way. It can still happen in the same way. It can still happen in the sideways. I want to teach you. So this market came here. It started there and formed. What is going to push it up? Just tell me. The candle button that will push it up.
You know, it's interesting. I'm not.
Okay. So hammer appeared here and started pushing this market up. It started pushing this market up. The sellers was trying their best when it comes to the resistance. The sellers was trying even in the middle. Even in the middle, they were trying to push the market down, but still, these guys didn't accept. They said no, they were pushing the market up. Then the sellers came and pushed it down. Then they signaled again, pushed it up with just one candle. they got to this place. They've gotten to the resistance. What we were expecting for a candle pattern formation to form. Anything, big bar or evening star or bearish engulfing pattern. So that we know definitely that this market is coming down. But look at what happened. This market started doing this. This market did this. If you check number 3 was kind of telling us buy when the price breaks up through resistance. But with my experience in the market, I got to understand that prices tend to deceive people. This price has broken through this resistance. But what I do is just to have my lines like this. I'll show you in the app. So when I have my lines like this, definitely I'm expecting a retest. If it doesn't retest, that's it. Let the market go. I'm not trading that one. We have more than 30 pairs to trade. I will look for another pair that will obey what I want in the market. Do you understand? So this market right now is not obeying what I was taught. Let it go. It shows that what we call manipulators are in this game. That's what it shows. Those manipulators are big banks. I will still teach you manipulators. They are big banks that tend to take our stop losses. I will still teach you stop losses. When they take our stop losses, they will now move the markets with just one candle most of the times. One candle most of the times. Sometimes they will just move it down with 2 candles. Are you saying that this market is what? Back inside this money box? Are you see what happened? That's when you actually tell yourself that what happened here was a bearish engulfing. But it didn't happen here, it happened here. Remember that they say if it breaks through, let's buy. But with my experience, most of the times when it breaks through, it will come back and start doing what? It will come back and start selling again. Do you understand this scenario?
Not too well.
Okay. This is a bullish movement that happened. Right? Now, this hammer took this market from the support to the resistance. You get it? We are expecting this a kind of bearish pattern, a bearish engulfing or something. This thing that happened here to happen here. So that we will sell and move this market today downside. But what happened? It didn't happen here. It went above it and happened here. Now, when it went above it, what do? We stay back, we don't trade. Why didn't we trade? Because we've not yet seen a bearish pattern, candlestick pattern that will push this market to the downside. Do you understand it? We've not yet seen it at the resistance. The market is still bullish, so we stay back. Okay? So we confirm that this market has already formed a bearish candle here. As a matter of fact, I won't advise anybody to trade above this resistance till the market comes back inside this box. Do you understand?
Yeah.
Are you getting it?
Yeah.
So, at most, what happened here was manipulators, the people that tend to move the market to take our money in a wrong way. So that's how we identify the manipulators. This is them. Look at them here. Meanwhile, they've taken 90% of people's money in this thing that happened. I'm telling you. They've taken millions of dollars in this thing that happened. Because everybody was waiting for this thing. Some people don't even have, like, not some, 80% to 90%, they don't have that patience. One thing that works in Forex is this thing that you're seeing here. I don't know if I get this very patience. That's another thing that happens. When you are patient enough, you will make money. So we waited for day 1, day 2, day 3, day 4. I know Esther. On the fourth day, are we not selling again? I need money. I want to make money. I'll be like, come down, let's see what will happen now. You won't sell, you want your money to go. Because he said, of sell it and he lose. Then this happened. Hey, didn't you see that bearish engulfing banner? Hey, Victor, let's sell this market now. Yeah, I won't talk to you. I'll be like, okay, we're not selling till I see this 1, 2, 3. This is our confirmation candle. That's when I will be like, okay, let's sell here. So the Monday, Tuesday, Wednesday, Thursday, Friday, 5 days gone, we didn't do anything. The upper week, Monday, Tuesday, that's when we are selling. We sold on Tuesday, then on Wednesday this happened, on Thursday this happened, on Friday and Sunday we've banked our money without losing time. Because we are patient. Another trick that happens. You are recording it?
Yeah.
Okay, later you listen to it. So that's good. Another trick that happens.
Okay. Go ahead, sir.
This is another trick that these people use to make money. So what is going to push this market up? So the money start pushes the market upside. Now when the market got to the upside, look at what people do. This is the first trick. I'm trying to recap those their tricks so that you will know it. When it comes, you'll be like, no, I'm not. I won't fall for them. Okay, this is another one. It's not actually a trick, though. Most of the times they do this. This is hammer and the resistance. Now, after the hammer, this happens. That's almost the same thing. Almost the same thing that happened in the last one. Almost the same thing. But in this case, there was a bounce here. A star. And engulfing. Now, this is to bring us in what that book just told us? Do you notice anything? This resistance was still resistance here because the market came back inside and it's this side. But looking at this resistance that was broken and there was a bounce here because of this candlestick pattern. What is this candlestick pattern called?
Yeah, that one is the evening star. The other one is engulfing.
This is the morning star.
Sorry, the morning star.
Yes. So now that the morning star happened on top of the resistance, we will now say, as a professional trader, that this has now turned to what? Turned to what? So why is this resistance converted to support? Why? Because of this candle pattern. That's the reason why I say that candlestick pattern is the most important thing in Forex. Once you learn it with others, when you join it, it will flow for you. Just look at how magical I predicted that this is not going to come down here again. Rather, from here it's going to go up. So the next move that we saw was this. This is our confirmation candle. Then we bought. Then from here we bought to that. So we move. Why? This resistance, this line that was resistance before, when you hit it, it will come down, turned to support. Why are we saying with confidence that this line is now support? Why? Because of this candle formation. Why are we saying that this candle formation will make us to say that this line is now support? Why? Because this pattern is a bullish candlestick pattern. Price action is very important. Do you understand what I said?
Yeah.
Okay. Are you going to snap?
Yeah.
And snap. Or continue. We have dealt with support and resistance now with this at least. Anyway, with time as we trade, I'll be telling you on what I'll be coaching you. With that, you can learn properly. Did you get it?
Yeah.
Now let's move to trend line. Topic trend line. Hope you understood what I said. Did you get it?
Yeah.
If you don't say, let's just hit it from there.
Until I get to, I'm still checking very well.
So let me use this descending support and resistance and teach you trend line. Trend line has stuff. Go ahead, have you written it?
Yeah.
Let me give you. A trend line is a chart pattern A trend line is a chart pattern that is defined as a series of highs. That is defined simply. Look at what they call trend line. Let me just put it in a simple way for you. This is too descending. It's too much. It's too descending. No, there is something like too descending. Let me just put it in a manner. So look at your trend line. This line, this support line and resistance line is your trend line. You have to put it up your own aligned market. So there is nothing before we start. It's just this two lines and your trend line. So a trend line is a chart pattern that is defined as a series of highs. It's a series of highs or lows that form a straight line. Highs or lows that form a straight line. Full stop. Highs or lows that form a straight line. Full stop. It is constructed by joining two or more price points with a straight line. It is constructed by joining two or more price points with a straight line.
Two or more.
Price points. Points. Price points with a straight line. Full stop. Price points with a straight line. Full stop. Paragraph. The purpose of a trend line. The purpose of a trend line. The purpose of a trend line is to identify the historical trend of the price. Is to identify the historical trend of the price. Is to identify the historical trend of the price movements, and to indicate support and resistance levels of the price movements, and to indicate support and resistance levels of the price movements, and to indicate support and resistance level. The price movements, and to indicate support and resistance levels. Full stop. In the markets, we have three analyses. In the markets, we have three basic analyses. One, price action. 2, technical analysis stroke indicators. 3, fundamental analysis. Fundamental analysis. In technical analysis, trend line is one of the basic components of other chart patterns. Trend line is one of the basic components of other chart patterns. Trend line is one of the basic components of other chart patterns. Types of trend lines. We have the descending trend line. You can just draw this, just small, or just draw something like this. Put ascending first. Let's do ascending. Ascending trend line. Then you draw the trend line. Ascending trend line. An ascending trend line is formed by connecting the lows. Is formed by connecting the lows, comma, is formed by connecting the lows, comma, where the more recent low price is higher than the previous low price. Where the more recent low price is higher than the previous low price. Where the more recent low price is higher than the recent, the previous, sorry, is higher than the previous low price. Paragraph. An ascending trend line extends into the future. An ascending trend line extends into the future and can be thought of as a level of support. An ascending trend line extends into the future and can be thought of as a level of support. And can be thought of as a level of support. The descending trend line. Wait, In that ascending trend line, I want you to add something. As long as the price action stays above the line, as long as the price action, you know what is price action? Those times.
Yeah.
As long as the price action stays above the line, we have a bullish trend. As long as the price action stays above the line, we have a bullish trend. Then now descending trend line. Descending trend line S. A descending trend line or down trend line this is the way it is. Where are you going to draw it now? This is the descending trend. Are you going to draw it? You need to look at it. I need to draw it. This is the descending. Should we continue? The descending trend line or down trend line is exactly the opposite of an ascending trend line. It's exactly the opposite of an ascending trend line. Full stop. It is formed by connecting the highs, comma. It is formed by connecting the highs, comma, where the more recent high is use this side. Use support here. Use resistance. Where the more recent high is lower than the previous high. Where the more recent high is lower than the previous high. Paragraph. The descending trend line extends into the future. The descending trend line extends into the future. The descending trend line extends into the future and can be thought of as a level of resistance. The descending trend line extends into the future and can be thought of as a level of resistance. As long as the price action, as long as the price action stays under this line, as long as the price action stays under this line, we have a bearish trend. As long as the price action stays under this line, comma, we have a bearish trend. Full stop. Are we good?
Yeah.
So that's it with the trend line. You understand what we said, right? Should I explain?
Thanks.
Okay. So now let's talk about time frame. Time frame. Let me get my palm. We have different types of time frames that we can trade in. We have different types of time frame we can trade in. One 15 minutes time frame. Number two, 5 minutes time frame. Number three, 30 minutes time frame. Thirty minutes time frame. Number four, 1 hour time frame. Number five, 4 hours time frame. Number six, daily time frame, which is the one that we'll be using, right? Daily time frame. Number six, right? Number 7, weekly time frame. Number 8, the last but not the least, monthly time frame. The weekly, monthly, daily time frames are the best time frames to predict the markets with.
The weekly,
Monthly and daily time frame, weekly, monthly, daily time frame are the best time frames to analyze the market. They are the best time frame for the market analyzer. While the 4-hour time frame is good for execution of the market. While the 4-hour time frame is good for execution, the longer term time frame, which is the weekly and monthly time frame, the longer term time frame, which is the weekly, monthly time frame. Practically tells us where the price action will be going to. Practically tells us where the price action will be going to. Practically tells us where the price action will be going. So that's about time frames. Let's just let's do manipulators. Okay. Currency manipulation. Currency manipulation. Topic. Currency manipulation is the act of changing its value. Currency manipulation is the act of changing its value Currency manipulation is the act of changing its value against other currencies. Its value against other currencies instead of leaving it free to fluctuate based on market dynamics. Instead of leaving it free to fluctuate based on market dynamics. Instead of leaving it free to fluctuate based on market dynamics. Full stop. Instead of leaving it free to fluctuate based on market dynamics. Full stop. This can be done by fixing the exchange rates. This can be done by fixing the exchange rates. This can be done by fixing the exchange rates or deliberately increasing or decreasing its value. Or deliberately increasing or decreasing its value. Full stop. Deliberately increasing or decreasing its value. Full stop.
Hello? Good morning, sir. No. Okay. I was planning to see you also. Once I go online, I'll forward it to you. Okay.
Paragraph with a space. Deliberately increasing or decreasing its value. Deliberately increasing or decreasing its value. Then paragraph with a space. This practice is usually frowned upon. This practice is usually frowned upon. Now, this is the reason why I told you that Bitcoin is very risky. Look at what manipulators do, according to what I gave you now. If you read through it, you understand how they use exchange rates to manipulate the markets to a different dimension. Now, they are being charged for manipulating the markets. But Bitcoin is not accepted, so they can manipulate it anyhow, any day they want to manipulate it. You know, right? So actually, what's happening now is to make people to jump into Bitcoin with utmost strength. Everybody, like when they talk about Bitcoin cryptocurrency, who wish that they would have it, right? I'm telling you, that's the impression for them to manipulate it and it's our money. That's the reason why this thing happens. The rich always becomes what? Becomes what? Rich. They are the lords in Bitcoin. They what we call Bitcoin lords. They are the owners of Bitcoin. Now the poor becomes what? Poorer by investing in what they created. Now, once they've seen that they have too many poor people investing, too many, they, what do? They now squash the thing. The money will now be transferred to their pockets. When they crash, the time they are going to crash Bitcoin, it might be next 20 years. It's coming. It's going to crash. It's coming. I'm telling you, it might be next 20 years, but it's coming. But I'm telling you that time they become what? Richer. Because that's the agenda. You know, when these people want to make that kind of agenda, it takes like 50 years. They don't care. But that's the agenda. Christianity agenda, do you think that the converting took like 2 years to happen? Took years forever for it to happen. Christianity agenda, which is very strong. So that agenda that is strong, the also Fulani agenda that they are ruling now, you think it took a few years? It took many years for them to get to that seat. And they are not going to leave that seat. Even the APC, they won't let it. Because their agenda can just over after 4 years and crash. That's the reason why they talk about it. Tell people, calm down. Your man is not winning. The cabal that made APC are very much strong. They just went through 8 years only. It's remaining another 8 years for you to start thinking, which is 16 years. So those cabals are still very strong and are aware of what is happening. So that's the agenda. That's the reason why I told you that cryptocurrency, any crypto is dangerous to trade. Very dangerous. Because now, when the currency manipulation happens, you heard what they say. The practice is usually frowned upon since it results to an artificial distortion in currency prices. In fact, it is considered an illegal practice based on US laws and international agreements. Are you seeing that agreement that I'm telling you? Currency, gold, silver, platinum, all those things that is worldly accepted are under that what? Agreements. Look at it. Practice based on US laws and international agreements. All those, even the currencies, they are under that agreement. But BTC is not part of it. So these rich guys can do anything they want with this BTC. Are you seeing the reason why it's very risky? That's a very risky business of someone to invest in. And someone saying that Kanye West invested all his money, 140 billion, because the bank told him to take his money. And he's planning on investing $140 million to BTC. I laughed at the guy. I said, "You fool. I trade BTC, I make money with BTC. Do you understand? But me trading and making money with BTC is in and out, in and out, in and out. You can't see my whole investment. There is a line. It's just like all these online mobile apps that you're telling me to put all my money there and save them. It's a lie, you're killing yourself. I can use them to just run 1 or 2 transactions, 1 million transaction, 500,000 transaction, and jump out. My money will be in the Federal Reserve. That's in the bank. Because that's where we have the trust and agreements and the laws and everything that if anything happens, you can write to anybody and something will be done about it or it will be refunded and also. But these guys, you don't know them. Any other thing that does this exchange of money of a thing, you even the bureau, the change people that change naira to dollar, if they give you fake dollar, you won't know them. They will disappear. You don't know them. But when the bank gives you fake dollar, you return to the bank and say, you access that, you get the fake dollar. And when they check through their CCTVs and they saw that you came in and what you did was the transaction of dollar, they will say, I'm sorry. They will fund it and give you food. Are you seeing the legality that is there? There is no legality in business. It's very risky. So let's continue. The practice is usually frowned upon. It results to an artificial distortion. Since it results to an artificial distortion, since it results to an artificial distortion, in currency prices, full stop. An artificial distortion in currency prices, full stop. In fact, it is considered an illegal practice based on, in fact, it is considered an illegal practice based on US laws and international agreements, full stop. Based on US laws and international agreements, full stop. This could also give way to unfair trade, paragraph is that. This could also give way to unfair trade advantages. This could also give way to unfair trade advantages since artificially devaluing a country's currency could make its exports. Since artificially devaluing a country's currency could make its exports relatively cheaper, since artificially devaluing a country's currency could make its exports relatively cheaper. Country's currency could make its exports relatively cheaper and more attractive. Relatively cheaper and more attractive. Full stop. In the long run, in the long run, comma, this could eventually result to a global trade imbalance. In the long run, comma, this could eventually result to a global trade balance. That's the problem with China and Japanese now. In the long run, this could eventually result to a global trade imbalance. Global trade imbalance. This is the exact thing that was happening to Japanese yen now, because JPY, it's falling like deeper. Let me just show you an example. Japanese yen now, they are Trump even said it, and before Trump said it, we noticed it. They are manipulating their currency. This is the weekly time frame of Japanese yen, and this is the bearish movement. Are you getting me? Are you getting me? Now we have a trend line. These bearish movements did this thing, and it was manipulated. It started going below, not without retesting to continue. It started going. It started going. It started going. Up till now that I'm talking to you, it's going. So once upon a time, once in their lifetime, the government will come in and say they will do something, they will do something, the currency will come. Then later it will continue pushing to continue. They are manipulating. Exporting these products, they are the major exporters in the world now. You understand? So that when they produce something in their country and want to export to another country, the tariff will be very small and low, so that those other countries will buy more of their products. The only reason why you will devalue yourself, state humility, is to get someone that is of higher ranking to get to say like, hey, this girl has a good character, this girl has a nice car. Wow, I like this girl. You understand the game? That's the game. Meanwhile, naturally, you're a king, you're a queen. But you get to devalue yourself so that someone will say, you're a nice person. Be a good person. You understand? So that when you get there, you will now show your true color. That is what the Japanese are doing. They are devaluing their currency so that people will come in and do the Forex exchange and buy more of their products. Now, US is not devaluing, they are taking theirs. Oh, theirs are very costly. So, all those other people, they can't come in and start buying. No, it's a lie. They won't. They can't come in and start buying your products. Because when I price this market, it's $1,000. But when I go to China and convert my $1,000, I can buy 50 of these markers. Same marker, same value. Doing the same thing. So why should I now move to your country and buy just one marker for $1,000? While I can go to China and buy 10, 50 of these with the same marker. Are you saying it? Now, this thing really made Britain to move down because they don't produce anymore. Before they produce and push out on a high cost down, Britain became rich. But China now has started producing more and at a lesser, cheaper price. So it's affecting all the countries in the world because even Australia, Nigeria, Ghana, all the continents, most, if we are 100 in the world, 100 countries in the world, 90 is now buying from China. In essence, making China more popular, making China more richer, making China more stronger in the world power meetings. Because China will come to you and tell you, come and take 100 of the products. If you have 1,000, you remember $1,000 can buy 50 of this matter. But they tell you, bring your $1,000, take 100. Later you'll be paying small. That is China. So now, when we will be in the power meeting, the world meeting, when I stand up as China to talk, you that I gave my products extra 50 for you to market and sell will stand up and support me because I'm supporting you in your business. You understand the game? So that's just it. As simple as ABC. That's the end of our class today. Are you satisfied? Okay.
Yeah.
So questions.